Hi, everybody, and welcome to this webinar. Sorry about the delay. We had some technical issues, but those should have been resolved now. So my name is Carl-Johan Larsson. I'm a client representative at Velmie, and I'll be the moderator today. Today, we're going to talk about what the market will look like in 2022, or at least what we think the market will look like in 2022. And further down the line, of course. Now, with me today, we have my colleagues Kate, who will handle the tech, Paul Chomsky, who's our CMO, and Julia Prus, who's our sales manager. Now, the structure of today's call is pretty straightforward. We'll go through the results of the Fintech Market Forecast 2022 survey, see what kind of conclusions, if any, we can draw from that. And at the end, we'll have some Q&A. So if you have any questions, just put them in the chat, and at the end, we'll get to them. If you have any questions that you would like to ask privately, just drop an email to Kate, and we'll reach out to you. First, a little bit of background. Now, Velmie is a banking technology provider. We've been building banking and other financial systems for many years now. This, of course, gives us great insight into how the market works and how the market shifts. And when it comes to fintech and everything banking, right now the market shifts very, very quickly. Now, I've been doing IT for 25 years, and there's been many substantial shifts. Think, when backup became cloud-based or when CRM became a thing. But I've never seen the market shift so rapidly as when it comes to fintech. Just so you know, we don't go by gut feel when we make these predictions. We can actually foresee the future a little bit better than that. So before I'm telling you what we can foresee, I'm going to tell you how we collect the data. Now, the base of our knowledge comes by asking questions. We send out surveys, questionnaires constantly to keep us informed. And we also do one big survey every year, kind of to tie everything together. Now, I guess a lot of you in the audience here, you probably answered our latest one, the FinTech Market Forecast. But before we ask these questions, we kind of need to know what questions to ask. And we solve that by calling people. So we get contacted every day by a lot of different companies. And most of the requests we get is, can you build X, or do your solution support another use case, or very complex questions. Now, we call all these people, not just to figure out if we can actually build it, but also to understand where the market is going, and also to understand how we should phrase the questions that we use in our questionnaires. So just so you know how we get to the point that we are. So what do we see? So what's happening in 2021, and where do we think 2022 is going to go? Well, first of all, the pandemic didn't have any impact at all, really. On a personal level, yes, but business, no. What we could see that in 2022, the investments actually increased Q3, Q4, way above what we initially thought they were going to do. And we do think that that's going to continue. That's a positive thing. Everything was not positive. We could see that on some of the platforms out there were more downtime than expected, and there was a bigger failure rate when it comes to transfers. Those are two big things. Now, we do think that that's just growing pains and it will go away, but it happened and it affects all of us, of course. Beside the technical challenges, staffing and recruitment is, of course, a big challenge. It was really bad in 2021, and we think it's going to be even worse in 2022. You just can't get the right staff at a reasonable price. Now, before I invite my colleagues to do a little bit of a chat here and go into the details, I want to drop three numbers at you. Now, numbers can be a good thing because it's so easy to compare with what you have. So take these three numbers with you. The average acquisition cost for a client is only $6 in our industry. That's kind of amazing. The revenue, the average revenue, what we can see for a client this year it is, of course, is $21 a month. And of course, it's a huge difference there. So this industry definitely have a future. And it can be expanded. So if you look at the data points that you can measure for one client, The average is actually 11,000. So there's a lot of more business to pull out of the clients that you have or you will have. Now, we're going to kick this off. Just so you know, you'll get a copy of the report after we're done. And don't forget to push the questions in the chat. So here to talk about the findings, my colleagues, Paul and Julia. Let's start with you, Paul. What's your take on the technologies in the financial sector, and which of them brings the most impact?
Okay, first of all, hello everyone, and thanks for attending this meeting. I hope that the survey results that we are discussing today will inspire some great decisions in the coming year. As for your question, Carl, we are all witnessing the emerging and advanced technology keep shaping the finance. Some of them, such as machine learning, big data, or augmented reality, are already with us for years, while such things as NFT are still new to many of us. But we see a lot of buzz around it. So I would say tomorrow's industry success stories are being built today around modular core systems that are heavily reliant on the data and machine learning algorithms. This is what we are observing on the market, looking at fintech companies that were able to become unicorns. And this is something that can be seen in the survey results as well. However, even more companies are betting on crypto and want to take the red pill and go down this rabbit hole. Let's see what comes next.
Yeah. What's your take on crypto? Do you see the potential in this?
Yes, definitely. Crypto is a completely new world, and it significantly impacts the global financial services industry. Still, many professionals are arguing about the value of cryptocurrencies, and I guess we can spend many hours on such discussion. However, narratives are now shifting from calling cryptocurrencies a bubble or a Ponzi scheme to comparing it to gold, which is a good sign actually. Both crypto and gold are options to store the value for those who do not believe in paper currencies. And as for the lasting value, crypto community is taking huge steps to add more utility functions. And in the past year, we observed whole new ecosystems, tools, and offerings that were built on top of the existing cryptocurrencies. So I am quite optimistic on how it goes so far.
Okay. Well, I'm positive as well. It was a bit scary in the beginning, but it's starting to look really good. Where does Velmie stand on crypto?
Well, we have a long story with crypto and blockchain. Started back in 2015 when we worked on crypto exchange projects and tokenized payment solutions. Since then, the market and technology greatly evolved. So did Velmie. And now we are looking forward to expanding our offerings and provide more tools to our clients who are interested in this technology.
Okay. Well, I mean, it is a new technology. What's the biggest challenges companies are facing when they're building these solutions?
I would say that we all see that crypto is hot around many verticals and sectors, and many of the top banks are now investing into digital assets and provide such tools to their clients. It is also a best practice for FinTechs to allow opening crypto wallets within their apps. International remittances are getting disrupted by cryptocurrencies and so on and so forth. But as long as this is still an emerging technology, it's often hard to onboard the right talent, and building something in-house becomes risky and time-consuming. Small companies that are building products in this space have to compete for talent with Citi, Goldman Sachs, Coinbase, and a lot of other major players, and pay a premium. So this is currently the biggest problem according to many of the surveys. And at the same time, this situation is one of the main drivers for crypto infrastructure companies that provide various tools and APIs to simplify the adoption of crypto. And this is something we are considering launching the next year as well. So stay tuned for more updates.
Okay, thanks. Now, according to the survey, the vast majority of respondents, I think it's close to 80%, would prioritize time to market when it comes to the MVP. What are your thoughts on that?
Creating MVP has been a crucial step of the product development for years. And the concept around MVP also evolved over time, and there are new terms such as minimum marketable product or minimum shippable product. And it's often the most tricky part to actually define the MVP product scope, but not making it too big or too small. Customer expectations are constantly growing as the technology evolves, and the minimum product nowadays can be much more complex than it was 5 years back. And clients now expect a certain level of personalization, intelligence, and automation from MVP products right from day one.
Okay. You mentioned personalization, intelligence, and automation. What about security? I mean, we are talking about money here. Is that worth prioritizing for the MVP?
Yeah, for sure. And I think with financial services, all these MVP things are getting even more complicated due to specific requirements around the security and data compliance, which you simply cannot skip or postpone. And as a result, when building a new product, you have to spend time mostly on the back office and architecture solutions rather than staying focused on delightful product experiences for your clients. And these problems are actually not unique to startups only. Enterprise companies are facing very similar issues with their product initiatives.
Okay. Is there like an ideal way to launch a new product?
With all of that we have just mentioned, I would say that building in-house systems for the MVP solutions is simply no-go because it's just not feasible in terms of time to market strategy. And in our survey, you will actually see that the hiring and retaining clients is number one problem for FinTech. And early stage startups have a lot less opportunities to hire world-class teams for their products. If we imagine they decide building the whole solution from scratch, it would normally take at least 1 year to hire a team and then additional few years to go to the market. All these times, founders will be burning cash and observing market landscape changing. So I honestly don't think that buy versus build problem still exists for startups. Looking at the most successful products, I think the right approach should sound like buy and build. Most often, companies prefer acquiring existing technology for their backend while staying focused on features and experiences that they're aiming to deliver to their clients. That's just how it works nowadays.
Okay. Well, thanks for the insights, Paul. Julia, over to you. This is kind of interesting. 90% of the respondents, they say that they have either secured fund for initiatives in 2022 or are considering launching new products. Only 10% feels negative about that. So what's your take on that?
Yeah, thanks, Carl, for the question. So indeed, while doing the research, we've seen positive stats in the survey, and but also we did notice very similar results and predictions at other sources, like, for example, KPMG and Accenture. They recently shared the predictions for 2022, and the figures were pretty positive. And it's happening like right now. So we notice a significant increase of the capital investments in the fintech products in the third and in the fourth quarter this year. And according to the data, it's going to continue in 2022 as well.
Okay, yeah, we see a rise, of course, in both investments and product that goes hand in hand. Now, you work closely with founders, C-level peoples in a lot of projects. What are your impression about the new products that are launching next year?
So many venture capital investors, they do argue that venture is undergoing a fundamental shift when it comes to the deal size and valuations. So the accelerated pace of the investments has spurred competition among investors to identify that successful, let's say, startups at the early stage. And the figures already approach record full year totals. And the deal counts have grown each quarter since the second one of last year. Despite heightened uncertainty in the wake of COVID-19. So that means, despite that, the conditions have changed, the interest has grown significantly.
Okay.
So again, coming back to the ventures and to the angels, the outlook for angel and seed investments also continues to kind of shine bright. And more than going back to the numbers, more than $2.7 billion has already been put into the angel investments and matching the highest yearly totals of the past 5 years. So, to sum up, there is a clear intent for new product offerings, which are supported by investors' interest. So
Okay.
it looks promising. Yeah.
Okay, thanks. Let's have a look at where it looks promising. If you look at the most favorable regions, the top three, that's European Union, Asia Pacific,
Yep.
and also the Middle East. Now, many would say that EU and Asia, that's quite obvious, but Middle East, that's a bit of an unexpected challenger, right? What do you think?
So I wouldn't say that it's kind of, let's say, 100% true. So it's like not completely true. And in comparison with the global fintech market development, the growth in that specific region is coming off global low base. And the strongest fintech market growth is noticed in the Middle East and North Africa. So it's almost reached 40% over there.
Okay, but what are the drivers? I mean, if you have this growth, what's driving the growth?
Let's say the main factors empowered that change and interest in that specific region. First of all, for sure, it includes the number of unbanked population.
Yeah.
And secondly, low competition and the changing in the regulations. So from the legal perspective, it looks promising. Governments and financial institutions, especially in the GSS countries, are penetrating these ecosystems while finding it important and beneficial for the region. So first of all, the number of unbanked population. Secondly, again, regulations. And the third is the developing technologies in that specific region. So there are already some success stories in that GSS market where incubators and enterprise development funds and programs and innovation hubs are supporting the creation and growth of local entrepreneurs.
Okay.
So, well, to sum up, Nano's financial services industry is well positioned to see significant growth and fintech disruption or a foreseeable future, which makes it a great market for the fintech industry in general and fintech startups for sure and investors. So I can hardly, if for example we take the market itself, I can hardly imagine in any other market growing like this one.
Okay. Thanks a lot, Julia. We are always short on time. Do we have any interesting question, Kate? What do we have in the chat?
Yes, we have several interesting questions. Hi, everyone. And let's start from the first question from Adam. He's asking, a lot of people are talking about embedded finance. Any thoughts?
Yeah, I'd like to take that myself because that's my favorite topic. Yeah, we see a lot of that. So 3-4 years ago, we kind of built banks. That's what we did. Today, we get questions from accountants or any industry that just think that, hey, if we add IBAN accounts, we will have disadvantages over the competition. It's quite simple actually when you think of it, but the use cases are, well, it's astronomical. It won't end for another 20 years before we see the end of that. So that's my big bet for next year's. We're really going to get growth there. Sorry, now I monopolized the time here. What else do we have?
Okay, interesting question. Yeah, we have question to, I guess Paul can answer this question. What is the one most important thing for a successful fintech app?
Sorry. So yeah, there are a lot of important things when it comes to fintech applications, but I would say that fintech business founders are often focused around providing great user experiences, and this is a key differentiator between fintech and incumbent banks. But I would suggest putting more attention on building trust from the very beginning. For example, deposit banking is where many of the newer banks struggle right now. But it is a core revenue stream for many of the traditional banks, and it's entirely built on trust.
Okay, thank you very much. Okay, we have a question regarding banks and partnership with banks. Do fintech need to partner with banks? I guess Julia can handle this, but we already have one reply in the chat, so you can check this as well. But let's hear Julia's opinion on that.
Yeah, for sure. I mean, like, in order to operate, first of all, they have, and they must, let's say, partner with banks in order to get that processing and like payment gateway on their behalf in order to operate. So yeah, for sure, the answer is yes. At the moment, in order to run like fintech business, you have to be in good relations with banks. So yeah.
Okay, great. Understood. And one more question. Is it important to provide cards as a default feature?
Well, this is, I think, the question to the target. If, for example, the business model could deal without the cards at the early stages. But for sure, for MVP 0 or for MVP 1, you could launch skipping that feature, like using, for example, QR codes, and introducing our card issuing at the later stages. So in order to launch, you can skip it from the very beginning, but implement it at the later stages.
Okay, thank you. We also had one question, but Paul has also answered it in the chat, so I guess that's it.
Okay. Well, in that case, that's it, everybody. That's all from us. Thank you so much for joining. We'll, of course, send you a copy of the report if you haven't read that yet. And if you feel like discussing anything, drop an email to Kate or to any one of us. You'll find us either here or on LinkedIn. So don't hesitate to reach out. Bye, everybody, and thank you.
Thank you for your time.
Thank you.